You had organic sales growth of 2.4% last year. That was slightly below our estimates. Are you disappointed?
You're right. Our organic sales growth for 2017 came in a little bit weaker than we anticipated. This is mostly due towards the end of the year, some softness that we're seeing in some markets, most notably North America and Brazil. There was also some weakness in our Nestle Waters business and our Nestle Infant Nutrition business.
In terms of your outlook, you're targeting an organic sales growth of 2 to 4% for 2018. Where is this growth going to come from? Is it due to a stronger performance in Europe or Asia that you're forecasting?
What's been giving us confidence last year is how broad-based the growth is. All categories contributed to growth. And we expect the same thing to happen this year, which I think is one of the strongholds of Nestle, that growth is broad-based and not just resting on one or two product groups. That should remain the same. Within that framework, I believe that geographically speaking, Asia, of course, is going to be one of our growth engines. And then we're having our high-growth businesses in terms of categories, such as coffee and pet care. The water business should also recover, and infant nutrition as well.
You said that you're going to benefit from the U.S. tax reform. That's going to save you about 300 million Swiss francs per year starting in 2018. Do you see the U.S. market still challenging, though, for 2018?
The U.S. market has been somewhat soft last year. I think we're now seeing some signs of recovery. We're a long-term player there. We've been in the U.S. market, which is our largest individual country market, for more than a century. And so all throughout, we have kept investing, whether it's plants, whether it's the qualification and training of our people. So we're deeply dedicated to that market.
So is it going to be still challenging in 2018 in terms of pricing environment, perhaps?
I think both volume and pricing were somewhat soft last year. Again, we're somewhat optimistic when it comes to 18 and beyond.
Nestle still owns a 23% stake in L'Oréal, and the shareholder pacts that runs 6 months after Liliane Bettencourt's death expires on March 21st. You're saying today that you're not renewing this pact. What does this mean? Does that mean a possible sale in the future of the stake, a spin-off?
So we have announced our board of directors' decision not to renew this agreement. We have not commented on specific further intentions. The only thing that we did say is that we do not intend to increase our stake in L'Oréal. Beyond that, at this moment, I have no further comment.
But I was told by the L'Oréal CEO last week that L'Oréal was ready to buy the Nestle stake if it came on sale. So what's your reaction to this?
We've heard about that interest, and it's duly noted.
Does that mean that possibly Nestle could be interested in some Sanofi stake? Because you know that L'Oréal also owns more than 9% stake in Sanofi. Given your focus more and more on health, is that something that could be of interest for Nestle?
I know there's a large amount of interest around the whole Nestle-L'Oréal issue, but at this point I would prefer not to comment.
Have you had any recent discussions with the Bettencourts?
Again, no comment.
One activist investor, though, Dunlop from Third Point, who owns a 1.3% stake in Nestle, has been pushing for Nestle to sell this stake. So have you had discussions with Third Point recently? What is the latest feedback you're giving him?
We're engaged in intense conversations with all of our shareholders, but it's also our policy not to comment on specific conversations with individual shareholders, and hence I would like to stay with that.
In December, you acquired the Canadian Atrium, a maker of dietary supplements, for $2.3 billion. Are we going to see more deals of this magnitude at Nestle in 2018 and going forward?
I think we indicated last year that we're interested in portfolio adjustments, most notably with small to mid-sized companies. We didn't rule out larger deals, but the sweet spot was going to be small to mid-size. I think this is exactly how it played out. So we did several transactions, especially in the second half of the year. Atrium was the largest one of that. Looking now at 2018, we've already announced one transaction, a company called Terra Fertil, based in South America, where again, the pattern is the same. We're trending towards our nutrition, health, and wellness strategy with healthier, lighter, more natural foods, superfoods, for example. And so we'll look at the same thing, small to mid-size being the sweet spot, but we're not ruling out larger multi-billion transactions such as Atrium.
So larger than this one also possible, or on that order of magnitude?
That's entirely possible. But again, it is not the sweet spot. It's not what we are typically aiming for. Do
you have specific targets in mind that you're looking at?
We have a nice deal flow at all times, but we typically talk about them only when they're done.
You've also made the first step away from chocolate by selling your U.S. confectionery unit to Ferrero for $2.8 billion. So does that mean that with this focus on consumer health, we could see more divestments, for example, in the chocolate business or in ice cream?
The idea is that if there is a business that does not fit with our longer-term strategic ambitions or a business that has permanently diminished financial expectations, that we do consider exit. So this happened to the U.S. Confectionery business. We did point out very clearly that that was a local U.S. decision on mostly local U.S. confectionery brands, and that we're committed to our confectionery business worldwide, where we see very different dynamics. Today, with our press release, we announced that we are entering into a strategic review for our Gerber Life business. While that business has given us a very good run in the past, again, from a strategic point of view, it is not core to our infant nutrition area, and hence we felt it is good to entertain that strategic review.
Is ice cream not core as well?
Well, as you know, ice cream is a business line that we've been in for a long time, both directly and also through our Froneri joint venture, and hence this is a business that we have not put in a specific basket at this point.
What about prepared dishes? Would you be willing to keep just the healthy ones?
We've made it very clear that the prepared dishes, in particular the frozen business, is a very good channel to fulfill our nutrition, health, and wellness ambitions. In frozen food, it doesn't depend on the freezing. It depends on what you put in, whether something is healthy or not. And I think we've been consistently and patiently upgrading our product program towards healthier, better offerings.
So is this where we're going to see your portfolio grow?
You see the portfolio grow and develop in the sense that we develop new products, bring them to market. Most of that has been happening through internal developments.
How do you see, as the CEO of the biggest company in Europe, the recent market turbulences?
Well, market turbulences will always come and go. That's a fact of life. And what's more important for a company is to have resilient operations, resilient financing, to be deeply rooted in its markets, and to perform day in, day out. We are, financially speaking, a low-beta company. We're known for defensive, reliable, successful growth in difficult markets and in easy markets. And I think these are the moments when typically a company like Nestle can shine.
So you were not surprised with this correction?
Would I know specifically about when a correction happens? No, I don't. But will corrections happen? Yes, they will.
Finally, with interest rates creeping up, how might that affect Nestle's financing costs and corporate life?
Well, in terms of interest rates, we're not a highly levered company, so there's certainly firms out there where the impact from interest rate rises is going to be stronger. I think any meaningful forecast for interest rate development is very conservatively baked into our financial projections.